All right, welcome to my next installment of a new series called Q&A with Wall Street. In this installment, we're going to look at Nvidia stock and its latest conference call with Wall Street analysts following its third quarter earnings release. So let's get right into it. The first question comes from Vivek Arya from Bank of America Securities. Wants an update on what the sell-through rate is for its gaming segment. And so the CFO jumps in here and says, we indicated that if you put two quarters together, we would see roughly 5 billion in sell-through for the business. During the quarter in Q3, sell-through was solid. We've indicated that although China lockdowns continue to challenge their overall China business, it was relatively solid. Notebook sell-through was also solid, and desktop was a bit softer, particularly in China and Asia areas. Interesting. Okay. So good question and answer there from Nvidia. Moving on to Christopher Muse from Evercore asking, how should we think about the timing around software monetization? And the CEO jumps in here, highlighting the partnership with Microsoft and the partnership with Oracle, and saying the partners that they work with are super excited because of NVIDIA's rich ecosystem. And this could bring both new consumption in their cloud, both for them and ourselves, and also connect these new opportunities to other APIs and other services that they offer. And so our software stack is making really good progress. Okay, so good news there. And of course, software revenues for NVIDIA are going to deliver higher gross profit margins compared to its hardware business. So the faster this segment grows, the faster gross profit margins will expand. All right, moving on to Christopher Casso asking about some color on inventory charges the company took in the quarter and overall inventory levels in general. And the CFO jumps in here and saying they booked an entry of a $702 million inventory reserve charge in the quarter. Most of that was primarily related to the data center business, just due to the changes in China because of the regulations restricting sales to China. Now, looking at our inventory that we have on hand and the inventory that has increased, a lot of that is just due to the upcoming architectures coming to market, our ADA architecture, our Hopper architecture, and even more in terms of our networking business. So if you're not aware, NVIDIA's inventory levels more than doubled year over year, and the management is saying that this is more so due to new technologies becoming produced and manufactured, releasing to the market. Moving on to Harlan Sur from JP Morgan, asking about the data center networking business, saying that it's driving 800 million per quarter in sales. Very, very strong growth over the past few years. And the CEO jumping in saying the networking, as you know, is heavily indexed to high performance computing. All of our network solutions are very high end and they're designed for data centers that move a lot of data. So the small incremental investment they make in high performance networking translates to billions of dollars of savings in provisioning the service or billions of dollars of more throughput, which improves their economics. So when enterprises invest in these new technologies, it saves them a lot of money, or it increases throughput so they can handle more data, or they could save money and handle the existing data more efficiently. So this is incentivizing these enterprises to go ahead and invest in these new technologies because it pays for itself relatively quickly. And so it makes a good return on investment. And so businesses, if it's a good return on investment, they will make the investment. All right, moving on to Aaron Rakers from Wells Fargo, asking about the Microsoft announcement today and discussing what Meta Platforms is doing. Of course, investing billions of dollars in the metaverse. A lot of those investments are going to NVIDIA's graphic processing units. And so the CEO chimes in saying, if you're going to spend $20 billion on an infrastructure and the efficiency of that overall data center is improved by 10%, the numbers are huge, right? And that makes sense. If you spend $20 billion and you improve efficiency by 10%, that's a $2 billion return on investment. That's a massive deal. And that's good news for NVIDIA, and it's good news for its prospects in the future because they're giving enterprises a huge return on investment, which makes it worthwhile, which makes it likely that they will go ahead and purchase these new graphic processing units from Nvidia, these new data center technologies. All right, and that's where I will end in this video. In my next installment of the Q&A with Wall Street featuring Nvidia stock. If you've gained any value from this video, please go ahead and hit the like and subscribe button. It'll help me make more videos like this one. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.